Hello everyone, welcome back to Money Mastery with Sadik. In this video, we're going to do a quick roundup of what's been moving the markets over the last week. We will start off with the major indexes, Nifty and Bank Nifty, what moved them. We will also look at different sectors such as banking, IT, and we will also take a look at the global cues to look out for the week, and also take a look at precious metals, how they've been moving and what to expect in the week ahead. Indian market indexes saw some exhaustion at the top, with Nifty seeing some selling off or exhaustion at the 26,100 level. It was not able to break that. And Bank Nifty, which has been leading this rally for the most part over the last few trading sessions, also saw some weakness, not being able to break the 58,500, 600 levels, and pressure was especially seen in large private banking names. And also RBL Bank, Federal Bank, Yes Bank, Shriram Finance, Saman Capital, etc. are some of the examples where we saw FDI news being on the limelight, which also drove these stocks strongly higher. ICICI Bank and HDFC Bank reported mixed numbers, which were largely in line. But a positive takeaway is in their commentary, both the banks reported that the second half is going to be stronger than the first half of the year, right? And Kotak Mahindra Bank also reported over the weekend, and Q2 profits slipped as provisions rose more than 43% to around 950 crore, and the management flagged stress in the commercial vehicle loan business, which is a negative, and I think this could have an impact on how the financials move, or how Bank Nifty moves this week. In IT, TCS, Infosys, Wipro, etc. Reported muted earnings. These stocks initially saw some sell-off, but then bargain hunters sort of chipped in, and valuations also look attractive, especially with the sector being on sellers' radar for more than a year now. And Infosys, during the middle or later part of the week, also reported this large 18,000 crore share buyback at 1,800 rupees a piece, which helped the sector bounce back later in the week. In the FMCG space, Hindustan Unilever also reported some decent set of earnings, but again, traders used the news to book some profits because the stock has been moving, steadily higher over the last week or so. And the weak Q2 numbers hit by inventory cut downs, following the GST cuts, saw it, give some of the gains that it had made over the last week. Technically, the markets look tired. Nifty has support near the 25,650 to 25,700 levels. Below that, it could test the 25,400 levels, and if that is broken, it can go lower. And for Bank Nifty, a break below 57,600 may open up the 57,200 to 57,000 levels. And if that goes, we could well see 56,500 to 56,000 levels as well. But a bright spot is after months of relentless selling, FIIs have turned net buyers, picking up shares worth 2,900 crore till now in October. Let us see if they follow through in the coming weeks. In the US, the markets ended the week sharply higher, especially on Friday, after softer than expected CPI inflation numbers were released. So this gives the Fed room for another rate cut following the September rate cut of 25 basis points, likely bringing the Fed funds rate to 3.75% from the current 4%. But one thing to remember is, at least I feel that the rally that S&P has had over the last few days to weeks, as sort of already priced in these rate cuts, and technically there is a stiff resistance on the S&P 500, and I sort of sense that weaker hands are propping it up right now, and we could see some sell-off midweek after the FOMC meeting. Rate cut information is out, and people might start selling on the news. Key events to watch as far as the global macros are concerned is the meeting between US President Trump and Chinese Premier Xi, which will happen this Thursday. And as discussed, the US Fed FOMC rate decision will be out on Wednesday. And we also have the IT bellwethers in Alphabet, Meta, etc. who will be reporting their quarterly numbers. And we also need to watch out for the ongoing US government shutdown, which is persisting. And if there's any resolution, that might be considered as a positive news by the markets, but it is still wait and watch. But one under the radar sort of event that I want to stress or talk about today is the stress that is building in the US shadow banking space or the private credit space. which is now a $3 trillion market. Earlier this month, we saw the collapse of Tricolor, which is a subprime auto lender, amid fraud allegations, and then we also saw the bankruptcy of First Brands, which is an auto parts supplier, with Jeffries alone having $715 million in exposure in that company, right? Both these bankruptcies or events combined have already translated into at least a couple of billions of dollars in total loan exposures for major banks such as JP Morgan, Barclays, etc. And add to that the weak demand for US treasuries, which resulted in higher yields when they tried to auction the bonds back in August. And also, as recently as a couple of weeks ago, we saw a $6 billion draw on the Fed's SRF facility, which is a borrowing window that the Fed has to meet the liquidity demands of US banks. And this volume is highest that we have seen since the COVID pandemic, right? So considering all this news and also the CPI numbers, and also one thing to note is the CPI numbers, yes, they have been soft, but this month the unemployment numbers has not been reported. If that comes in, that will prove that probably the CPI has been low due to weaker demand, because a lot of people are unemployed, right? So this shows signs of weakness, which is also why the Fed will definitely go ahead and do a 25 basis point rate cut, and I will not be surprised if we see another 50 basis point rate cut by the end of the year, or within the next quarter or so, right? And this is also why I feel that markets are trading at really rich valuations, and it just makes me nervous, especially the US markets. And I feel that smart money is sort of luring in all the weaker hands, only to later dump and exit, right? So I will not be surprised if after all the news around the FOMC meeting, Trump and Xi's meeting, etc. are over, if we see a sell-off, right? So on top of that, we also have this huge US debt of $38 trillion that is lingering, with annual interest payments alone of close to $1.1 trillion. That is as much as the US defense spends, and we all know how much the US spends on defense, right? And market participants are now starting to talk about the sustainability of this debt and the interest payments on them, and that is also what keeps the global yields sort of sticky, right? Despite the Fed expected to cut rates, right? For India, these global cross currents, or this global news does matter, because they have an impact. They also influence FII behavior and sentiment, even as our domestic story is sort of turning around, especially with festival season demand, the GST rate cuts, and things like that, right? So gold and silver also saw a pullback from their record highs that were hit last week. And for gold, the fundamentals still remain solid. Central bank buying is expected to continue. And if there is some sort of a fair deal agreement between America and China this week, then we might see some more selling pressure, and we might see gold even going back to the 3,500 or $3,600 an ounce levels. But it is all the weak hands being weaned out. But long term, those levels should form a strong base, and gold will start recovering from there. As far as silver goes, silver is also expected to see some short-term pressure, but then there is also this supply tightness at the London Bullion Market Association, which is where silver is traded, and this supply tightness versus the trading volumes can result in silver being a little bit more volatile. But overall, there is still some weakness in this metal, and it could probably correct deeper than gold in the coming few trading sessions. Overall, it's an interesting mix of events that we can expect. We need to watch out for FII inflows, and there are also a lot of Q2 earnings numbers that will be released by Indian companies. So that is something that we need to watch out for. We also need to watch out to see if FIIs are going to continue their buying, or if they're going to just pause and wait for more earnings numbers to come out, or probably wait for another like few months or a quarter to see if the higher valuations are justified, right? So that is something that we will have to continue to watch out for. And there is also global optimism on the back of the CPI number, the rate cuts, which will aid equities. But then I sort of feel that these events or these news are sort of masking deeper cracks, especially in the credit space, and also with huge valuations of the tech companies in the US. I will keep tracking all of these events here locally and across the globe and trying to make sense of them. If you like this video and if you found this useful, hit the like button, subscribe, and share this update. And remember, this video is for educational purposes only and not investment advice. Thank you.